Decoding the market's reaction to hot non-farm payroll and cold unemployment data. Hey guys, it's Keith Allen. The numbers are in. The market went nuts, knee-jerk reaction, as is pretty much par for the course. We're going to talk about this. It's a good news report. And of course, a negative reaction. Good news equals bad news on this time around. And I discussed that yesterday. It's like I had no idea how this is going to shape up because we obviously want to see a strong economy, right? But the market seems to be more focused on what the Fed is going to do, and it is so speculative. It's kind of frustrating. But let's just climb into the numbers, look at the charts, and see if we can make some sense of everything that's going on here. Before we climb in, of course, as per usual, do me a favor and smash some buttons. Hit the like and share and help me grow this channel. Also, make sure that you hit that subscribe button up above. That's the little bell there up on YouTube in the corner. Tick the little bell and make sure you never miss any of these streams in the future. Also, note that live chat is open on YouTube. If you'd like to join the conversation, I'd love to have you. I really enjoy engaging with you guys. If you've got insights you want to share, we want to hear them. If you got questions you want to ask, I'll do my best to address them. Note, I'm no economist here, but I'm just a work from home dad trading just like a lot of you guys are. And I'm hoping to give you some insight, at least share my insights and help you kind of make sense of everything that's going on here in the market. Let's start with a look at what the actual data said in terms of these economic reports. We'll start here on the economic calendar. And as you can see, non-farm payrolls came in. I mean, a huge miss, scorching hot, sizzling 256,000 payrolls added in this period for December. And the unemployment rate ticking down, forecasted consensus was 4.2%, came down 0.1%. That's positive news for the strength of the economy. Not so good for the Fed decisions, perhaps, but I know there's a lot of speculation in here, right? Tons of speculation. Now, in terms of that speculation, whether you value that or not is really up to you. What I will tell you is that coming into this, 95% of market participants, or at least those polled, Fed watchers polled, felt like there was a 95% chance there was not going to be a rate cut in January. And that's increased to 97% at this point, right? So really the bigger picture, I guess it's been forecasted that there would likely be 2 rate cuts coming in 2025 at some point in time. Now they're forecasting 1, maybe none. And I think it's really a highly speculative forecast at this stage in the game. I mean, let's put some things in perspective. Number one, we know that these numbers always get revised, even if it's a hot number, a hot NFP number and a cold unemployment number. However it gets revised, right? Those are still positives. Also worth noting that the holiday season typically has some extra hiring going on, right? Especially retailers are adding staff to help with the holiday rush. Companies like Amazon and Netflix, not Netflix, companies like Amazon and UPS and FedEx, even the U.S. Postal Service are bringing on extra staff to help on the back end. And I mean, listen, you could see it every day in the delivery trucks throughout the month of November, December, and still coming into January, where you're seeing 2 guys in a truck versus 1 a lot of times to help expedite things and keep those guys moving. That will obviously taper off here. So we could see things level off or even adjust a little bit in the months ahead as we drift further away from the holiday season. In other words, things might normalize a bit. And in terms of the speculation, we have a new administration coming into office in 10 days. And we know that there's going to be some impact to the economy. Whether that is net positive or net negative for the economy remains to be seen. But let's just talk about the potential for tariffs, right? This could have an impact on the economy for sure, right? So this is all wild speculation, in my opinion, and maybe not the most valuable use of your time and energy, because we've seen it change a bunch of times, and it will undoubtedly change again and again as we go through the year. What I'm more interested in, rather than speculating on whether the Fed is going to cut again and again, or hold, or raise, or whatever they're going to do, I'm just looking at the charts, and I'm going to let the charts dictate what I do. And I'm going to let the data dictate what I do. So we'll start here on the candle chart, and we can see exactly, some interesting moves, by the way, happening in the overnight. This I haven't made a ton of sense of yet, other than the fact that it looks like some wild T-whopping going on here, and a lot of, I mean, that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Did I just count 14 consecutive green hourly candles? And of course, the data comes out, we get a full flush, and then what's happening? A bounce from the let's see what this looks like on the daily on moving averages. We got flushed yesterday, by the way, of course, came down, tested this twice yesterday. This 91 range, right? 91.5-ish is really an area that's been tested like 8-10 times already, right? Boom. There's 1, there's 2, there's 3, there's 4, there's 5, there's 6, there's 7, there's 8, there's 9 at least times that this has been tested, and likely could get tested again, right? Coming off of this news yesterday, or this morning rather. So we'll see. I mean, it was a solid bounce here, and that was good to see, but it bounced, came back, tested a second time. If we look at that in lower time frames, we'll see that we actually had a couple candles come down here. One flush yesterday in the afternoon, at least my time, and then another retest here before a bounce. And that was, I mean, those are classic retests, right? Perfect. And that's what you want to see. So that was a sign of strength, but obviously Bitcoin not able to gain the momentum that a lot of folks want to see here at this stage. But I would say be patient, my friends. Be patient, right? We had talked about what would happen if we lost this 21-day moving average, and exactly what I said was going to happen happened. We tested the top of this range, and this was only a brief consolidation range, but at the moment it's holding up as an RS flip. We didn't get an RS flip to hold at the 100K level. There was an attempt, it failed. There will be another attempt, whether that happens before inauguration or after inauguration, which is in 10 days, when the new administration takes office. That remains to be seen. Wakas, good to see you again, sir. Appreciate you following along, and a reminder to anybody else that live chats are open if you want to join me in the conversation. So we're heading into a weekend. We have had, I think it's been kind of a weird last several weeks because, with the holidays and everything, we've not had really a full trading week, at least not on the TradFi side. Obviously, crypto stays open 24/7, 365. But yesterday, TradFi was sidelined. No ETF buying yesterday because it was a day of mourning for late President Jimmy Carter. And so, before that, we had New Year's, and we had Christmas, and we had Thanksgiving. And so it's been week after week of kind of herky-jerky TradFi market action. And that does obviously have an influence on what's happening in the crypto market, because there's demand on that side that has been sidelined for some of those days. Let's go back into the charts here. And again, I want to take a zoomed out perspective, right? We could speculate on whether the Fed is going to cut 1 time, 2 times, no times, raise. What's that going to get you today? Probably a freaking headache. Instead, I see value in looking at the charts. And the charts are still showing me signs of strength. No question that this breakdown right here not looking good. But also no question that this bounce from support here does look good. Now, let's just say that this doesn't hold. That based on this news, we see an increased amount of sell pressure, and there's the speculation that after the court ruled that the U.S. Department of Justice could sell some of that Bitcoin that was seized from Silk Road. Now the market's concerned, is it going to be a sell-off like when Germany sold had their sell-off? Well, that remains to be seen. Is it going to be an over-the-counter trade? Is it going to be a market trade or an over-the-counter trade? I would think over-the-counter, which would obviously have less impact on market prices. But there's also no guarantee that it all gets sold before Trump takes office, and once he takes office, he's going to halt any selling. So if price can hang in this range between now and then, I think that's a positive for Bitcoin. But let's just say things break down and we lose the top of this range. The next obvious area for me is the bottom of the range. And the reason that's obvious to me is because it is where we've had the most consolidation. The 100-day moving average could come into play here as we wick below that, right? And that's around 85K. My mark here is around 86.5. So, somewhere in this range is highly an increased possibility. Certainly, if we lose the top of this range, I do think that's a high probability move. And in terms of whether or not we might break this, that also remains to be seen. And I think that it's going to take some the market wants to get eyes and ears on Trump once he takes office. That's what really is happening here. I think that we're in kind of a holding pattern until it does. Sure, we can have some volatility within the range, but I don't think that price is going to flush down to the 200-day moving average or down to the 2021 top before Trump takes office, right? Sure, he could take office and it could be a sell the news event. I think that will be a short-term move. I think what the market is really waiting to see materialize is what his policies are going to be in terms of crypto taxation, regulation, in terms of potentially a Bitcoin reserve for the U.S. government, different approaches. Cynthia Lummis, the senator who proposed the plan to buy Bitcoin, to sell the U.S. gold reserve and buy Bitcoin. That's wildly different from Trump's plan to just hold the seized Bitcoin and potentially, seize more. So those are two wildly different approaches, and those are going to have a direct impact on the market's reaction to that. So again, we could speculate, or we could look at the charts. And again, I see strength in the charts here. Let's zoom out a bit, right? On the weekly time frame, how are we looking? Well, we're looking like we have lots of consolidation here above this 91 level. And this could be the move, right? So, these consolidation periods have proven, at least in the past year, to be good buying opportunities. So, hard to say that, buying above 90K is a great buying opportunity for those of us that have been buying, throughout this entire move. But listen, a dollar cost averaged approach is certainly a solid way of approaching this market. Okay. And that's what I've done since back here. I'm, fortunate enough to have and listen, it hasn't all been great decisions, right? There's areas that I missed because we didn't get the retracement. So I may have bought some in these ranges, but we spent, for example, we spent such a short amount of time in the 50K range that I don't have much from this range. I bought 15, I bought the 20s, I bought the 30s, I bought I bought all the way up. So I've got a average cost, sub 50K average cost, which I'm pretty happy about at the moment. And that really, in my opinion, protects me from really whatever kind of volatility we see between now and then. I'm really not expecting to see price break below the 2021 top we could flirt with it, right? We've got moving averages coming up into that range, the 50-week moving average, for example. But I like the fact that it's pulled up above that 2021 top. So that's important to me. Could we go potentially lower? Yes, absolutely. Um, I don't think anybody really wants to see that at this point, but um, it's not out of the realm of possibilities. And the macro trend all the way back to 2022 would be intact to here. But I really think that we're more on this trajectory right here with what the 50-week moving average is right here. I have another chart, and I haven't even looked at this today, but I want to take a look since we've got the time. Oh, by the way, and in terms of corrections, CME gap is still down there too, right? So that's a possibility that could come into play at some point in time. It's from 77.9K up to 80.6K. Obviously, if you get into that, it's not a gap fill unless it goes all the way down to fill the gap. 77.9K would fill that gap. And in terms of what that looks like on the chart, on the weekly, right, we do have a bit of consolidation, very little bit of consolidation here that we can see on the daily chart around this range. So if we were to get that gap fill, and that's down to what, 77.9, it's conceivable that we could wick down to this range. So that's something that I would be mindful of if we were to lose, say, the 100-day moving average. So keep that in mind. Let's see this other chart that I had. 2025. This is kind of a unique way of drawing lines. And at the moment, it looks like, so here's the yearly open. And if we climb in a little bit, we've lost the yearly open. All right. Not a sign of strength there at the moment. There's a lot of technical resistance here as well. And in terms of what the liquidity looks like, there's not a heap of overhead resistance. It doesn't look like. Let's refresh this and see if that's changed. I would think that we could break this and get back up at least to flirt with the 100K range. Again, maybe that doesn't happen until we get closer to Inauguration Day. I mean, I would imagine that if price dumps between now and Inauguration Day, then we get another Trump pump when we have as Inauguration Day approaches. Likewise, if price pumps between, or conversely, I should say, if price pumps between now and Inauguration Day, then Inauguration Day might be a bit of a sell the news event. That will be a short-term thing, and then we see what happens. We see what happens from there. Not so coincidentally, if you've been around for a while, you have seen me talk about a specific date on the calendar, December 17th, and it's happened every year since I got into this market. We've seen some macro moves, and this one still has yet to play out, but it certainly looks like we've got either a correction happening or a full-fledged trend reversal happening off of December 17th, this past December 17th as well. In my opinion, at this point, it feels like correction mode, and I'm looking for that correction. I've been waiting for it for a long time. It hasn't materialized. We have a history of corrections in these markets. I've said this time and time again, and so don't be surprised if we get a deeper correction and then bounce back. We're still very early in the cycle. So for me, this zoomed out approach gives me some perspective on where we are in this thing, right? And so I think we've got a ways to go, and I do think that there's room for more upside here with Bitcoin. Back to fire charts here. Let's also take a zoomed out approach, right? We do have a bit of overhead resistance, obviously, but we have strong support in this range. And so I overcooked that a little bit, but we do have support down to 87.5-ish. There's a decent concentration, and it gets heavier above that. This is, of course, that 91.5 range that we talked about holding Um, this is about where that ladder begins from the upside, and it continues actually down to about 85K. Um, so this is good to see. And in the grand scheme of things, what you want to see is some brightness. The brighter colors equal more volume here on the chart. And so we're zoomed out to a 3-year view here on fire charts. Let's just enlarge this a little bit, make it easier to see what's going on. And you can see where the heaviest concentration of support is, right? And so this is a vast range that we could be trading in here. And I am fine with that, right? That is opportunity, in my opinion, until we get that break above the all-time high. We have what I would consider to be some psychological resistance here at 110K. And then we have another level of resistance around 120K. And that it remains to be where my target is. And I'll show you why that is in a moment. But here's a zoomed out view. I like this. Now, obviously, we always have to be mindful of potential rug pulls, but I do think that this range holds, at least for the time being. And if we were to flush that down to the, say, that 86K level, that would represent about excuse me, sorry, getting a little happy with the mouse here. That would represent about a 20% correction from the all-time high. I'll show you what that looks like. And I think that's warranted at this stage, right? So if we got to the bottom of this channel, that would be a 20% flush or grind, I would say at this point, from the all-time high. So far, we're only about 15%. So I'm looking for more. We may not get it, but I'm looking for at least 20% and potentially more if we were to go down to the 21-week moving average. That's a 27% move. That gets us to that gap fill, right? And so all of those things are possible. It could happen in one move. It could happen in multiple moves over time, right? Nothing says that there can only be one correction during a bull market. In fact, historically, there are multiple. So, and when I say deep correction, I mean in the 20 to 50% range. So I'm expecting that to happen at some point. I'm still okay because my average entry is way down here. So I'm happy with that. And I'm relatively protected, right? Do I want to give it all back? No, I don't. So yes, I do take some profits along the way, and I do have targets. As I had mentioned, my upside targets are in that 120K range because of the measured move coming off of the cup and handle here. Oh, why am I? Oh, because I'm on a 1-minute candle. That doesn't make sense. Because of this measured move, is why I have a target up here around 120. And then I'm looking at fib extensions and this lifetime channel. The lifetime channel, in my opinion, remains the glass ceiling on price discovery until we crack back through that. So long story short, health of the market looks good. Health of the economy looks good. Market's view of a strong economy relative to rate cuts is skewed and distorted, in my opinion. Not saying the numbers are necessarily skewed, although they might be a little bit because of the holidays, as I mentioned. But the perspective that a strong economy is worse than getting rate cuts. Listen, the rate cuts are going to happen when it's time for them to happen. I want a strong economy. I want people working. I want businesses thriving. I think that is that's the key to success for the country, and we'll catch up. The market's going to do what it does, but I think the long-term health is still good, and I'm going to leave you with this parting shot of where support sits, where resistance sits, and where we sit right now. We'll take it into the to a lower time frame to give you another look of just kind of the volatility that we're seeing at the moment. And yeah, we could go down and test this. I certainly actually expect at least another test of that 91.5K level that we flirted with yesterday, right? Up around here. Whether it goes all the way down remains to be seen. We have had a bit of manipulation, if you will, or choreography, whatever you want to call it, um, helping uh, herd price in different directions. And so now we're watching. The thing to watch at this stage is whether we get number one, where's the movement? Are we going to see bids and asks moving, in which direction? And that gives us a clue as to what's going to happen. Are we going to see bids floating higher to defend this, or are we going to see them start to float lower, or rug pull that opens the door for more potential downside? And with that, guys, I'm going to wrap it and tell you to zoom out, stick to your plan, and have a fantastic weekend. Have a good one, guys. Talk to you soon.